Hey everybody, this is Jose Blasco. Just checking the sound. A quick message in the chat box to confirm you hear me well, please. A quick hello would do. That way we can start on time. Thank you so much, guys. We got 15 seconds to go and we'll get started. Very good. It's time to get started, everybody. Let me switch to live. Here we go. How are you, everyone? Saying hello here from the bottom right corner, like everybody. Thank you for your confirmations, Paul. How are you? Everyone else? All good. Thursday, our second day of options trading this week, isn't it? Exciting as always. How are you, Maka? Everyone. So let's begin the session. Everybody, welcome to the session today. Today is March 4, 2021. Options with options. We love options. Options give you options. Beautiful thing, isn't it? Let's get started. Disclaimer first. Let me highlight it for you on the upper left side of our screen. Please read it carefully. Don't skip it. Just read it. It's important stuff. It's relevant. Trading has risk involved, and especially if you're new to the sessions, you need to be aware. So please read it carefully. Thank you very much. So agenda for today. Like every day, really, if I was to summarize it, at the same time, I would like to give you a little extra detail because we have done a few changes in recent times. So for the ones of you that are not attending every single session because you're busy and sometimes it's not possible, so I would like to update you on everything. So hello everyone, we did that. We are simulcasting. This is one of the changes that we have implemented in recent times. So apart from streaming on YouTube, we are streaming in other places such as Facebook as well, Facebook Live and stuff. We are also streaming in our private room that you could find in tradewithufos.com/live. This is inside our website directly. So all students, all traders are in different places if you wish, and this has a few consequences, especially when it comes to video lags or answering the chat box. So if you ask a question, or if I ask a question and you get a little bit of delay or something like that, again, it depends on the nature of the channel where you are, apart from internet connections and things like that. Okay, so just keep that in mind, which is a consequence of simulcasting. Now, why are we simulcasting? Well, because of multiple reasons, but the key one is the fact that what we've learned since we exist as a company is that in our community we have, let's call it, two type of traders. Some traders are looking at trading as a part-time thing. Some traders are looking at trading as, I always kind of joke with that concept, but to be honest, I think it represents it well. It's like the super traders of the world, if you wish, the very, very passionate, traders, the ones of you guys that you never got enough and you always want more because you love it, love it, love it. And again, we have these two groups. So if we were to do very lengthy sessions, it's too much for the people that are looking at trading part-time. If we were to do two short sessions, then it's not enough for the super traders of the world. So what have we done? Well, basically, we are running in our private room inside our website. We are running full time sessions, and in the public environments such as YouTube, Facebook, and so on, we are running shorter duration sessions where the content is the same. We have the same level of commitment in your support, but it's not about the quality, it's about the quantity. The students that are attending the sessions from inside our website, and therefore they are subscribed as a member, they have access to longer duration sessions. That's all. Okay, so that way I think we are well organized to serve and support everyone much better. Paul, are options your main asset? To be honest, I trade everything, Paul, but I do have a preference for options. I just love them. The complexity of them, complexity could be a very bad word, very negative, right? But at the same time, the complexity in this case, to me, it's a very positive thing because the various possibilities that come with it. And again, the beauty of options is that you could trade a very complex asset, which is options, very simplistically, and just do 1, 2, 3 strategies and keep it very, very simple. Or you could just get into the mode of taking it way to the next level. So some of the things I do are quite simple, and some of the things I do are very evolved. And again, I just love that, and I cannot do that with other assets. So that's why I have this little preference. Because with futures, forex, even stocks, the only thing you could do is either go long or short, and that's it. There is nothing else you could do. Okay, so certainly appreciate that diversity, and then is my favorite asset. Okay, but not the only one I trade, and I do a little bit of everything. Anyway, so the markets. The SPY. Okay, yesterday when we were in the session, we were looking at the climate, and we concluded that based on probabilities, it was more likely for the market to keep falling, which is what happened. Okay, so we have a second dot. Now the climate is supposed, at least based on probabilities, is supposed to end after three candles, or reaching three candles is reasonable. Beyond three candles is not likely based on probabilities. So in other words, we may have another day of market going down or something like that, and then we may have an up week next week, something like that. We'll see. We just keep that in mind, that so far the bias should be to the short side in most of your trades if you are directional, given the market conditions. Also, there is no UFO close by. Yesterday I showed you. Let's take a look at today, but I showed you as well as the S&P futures, because SPY, while it's a beautiful ETF to trade, it only represents a very partial amount of trading hours. 6 hours and a half versus 24 hours 23 hours to be precise, that you have with the S&P futures. Really does not compare, isn't it? But notice what happened with the S&P futures. While you get way stronger probabilities, obviously, the green UFO below price is also very much far down, and probabilities are about the same. Okay, 3.01 instead of 2.90 something, I think it was. So again, the expectation will be for the market to fall. Okay, that's the long story short. Looking at the VIX, we have a value of 25.90. Okay, so the VIX is giving good readings. It's been going up since the past few days as the market was going down. So people are getting concerned. They are buying options, like there is no tomorrow, and therefore the prices of options increase because the basic laws of economics, right? So if more people buy and then people want to sell, so then prices go up, right? It's quite simple in the end. So the VIX is going up. Options are therefore highly priced for many stocks, and therefore in the beginning part of the session you'll see me go over non-directional trades. But before I do that, I would like to review what we have in the works, which is Facebook. We talked about this trade yesterday. Of course, only one day of time passed, so we are more or less where we were yesterday, which is really beautiful. We are all the way in the midpoint of the range. So really this trade is looking very good. Now, again, the fact that the trade looks very good means absolutely nothing, because something crazy may happen. Some news come out, something happened now with a South African variant of COVID-19. I don't know. Again, I just picked, South Africa, just as an example, obviously. So anything may happen, and next thing you know, now you see your trading trouble. So you always want to be ready to follow your plan and do whatever your plan says. The plan that I have with Facebook, it's to do nothing. That's the plan I have, because when I planned this trade, we were not in March yet, and therefore I said we're gonna just take it easy, just do the trade and wait until expiration date, which is March 19. So in this case, we're just going to do nothing. I'm just going to do a simple observation. So you compare what we saw yesterday and today, which is to look at the probabilities. Okay, look at the probabilities and see how one standard deviation above and below, it's, let's call it 284 and 244. Okay, so 284 and 244. So it's more or less 284, somewhere there, something like that, and 244, something like that. So in other words, it doesn't look like we're gonna end up outside the purple area. Okay, and if price was to attempt to go outside the purple area, so we have green UFOs below to defend ourselves, and we also have red UFOs above to defend ourselves. So the trade, to be honest, looks perfect. It's really a book trade so far. But again, in one day it could be totally broken, and the market just moved all the way. So no emotions, follow the plan. My plan is to do nothing, so I'm going to do nothing. But we'll go ahead and later in the month and in many other following sessions, we'll be talking about trade management for trades such as iron condors and what I normally call damage control, damage control mode. And so we'll be talking about many things you could do if the trade was to move against you by too much. Okay. So Facebook, nice so far. Congratulations if you are in this trade. Dow Jones, we spent the whole session yesterday talking, sorry, not Dow Jones, Dow, I don't know what I was thinking. Dow, we spent most of the session yesterday talking about it, and notice what just happened there. So when we're talking about this trade yesterday, price was more or less here, and we were talking about two possibilities in case price was going to reach that upper red UFO. But not only price did not reach that upper red UFO, price went down and created a new red UFO pointing down, which is not good for this trade. And on top of that, price reached the red line, which was the line at which we said time to place an alert, okay, and then go ahead and exit the trade manually. And when you exit the trade manually at this price level, probably it's going to be, let's call it break even, tiny profit, tiny loss. It's going to be something, that is not going to be too big in any side, profit or loss. Okay. So this trade is over, my friends. We entered this trade. We planned this trade on 225, expecting that stock potentially could start making all times high, and we wanted to be exposed to ride the move and then profit from the move. But it didn't happen. Good news. By exiting this trade, you probably ended up breaking even. Not sure, Maka, yesterday you were kind enough to share with us your entry prices. I'm not sure if you are still in the trade or you're out. Yeah, I'm about to close with the Dow. The price is close to 176. So it means it'll be closed for a loss. Well, no, it should be closed for a profit, because yesterday you told us, Maka, that you got filled at 134. So if you sell at 176, then you will have a little bit of a profit, isn't it? And buy at 134, sell at 176. That's a profit. Okay. So again, it's not going to be a big one. It's going to be pretty minor. Either the profit or the loss, maybe break even. Okay. But that's how you manage your trades, because staying in this trade where there is no new green UFO, right? Where the climate is reaching, it's 3 already out of what would be 5, meaning that, if the climate is going to push for another 2 days, well, another 2 days may go here and maybe here. So it's not even clear you're going to start making all times high, which was going to be the reason for you to be in the trade, okay, in the first place. That was the plan. So again, the trade worked well for a while, didn't work as well as we wanted. Mechanically, we set an alert, we got alerted, and therefore we are out. Okay. Yes, very good, Joe. You made some ham sandwich money. Exactly. Very good. And again, you have to congratulate you when these things happen, because this is I would say probably one of the most, not sure if one of the most, but definitely a pretty frustrating situation, right? If you are doing this by yourself, and you're not commenting this with anyone, it's you and your computer, emotions may trigger, in the sense that you had this plan, you saw the move, everything was amazing, then on top of that, yesterday we were talking about an alternative plan just in case, and now you see the whole thing go away, right? And what's the temptation? Well, the temptation may even be, forget about it, I'm just going to leave it and let's see if it comes back. And now what's controlling the trade is hope, right? So again, let's be disciplined. Let's have the right mindset on how to trade. And I'm not saying you don't. I'm just making these comments just to express out loud healthy thoughts, especially for the ones of you that are newer to trading and haven't experienced trading emotions yet to that degree. So you understand where I'm going. And when that happens to you, because it will, so you are like, oh wow, that's what Jose said, and that's going to be easier for you to control. And for the ones of you who are more experienced, who have experienced that, you're going to be like, hey, Jose, I know what you're talking about, my friend. This happened to me that amount of times. And again, I want to emphasize the importance of having a set of rules and follow the rules with discipline and feel nothing. Okay? The idea is to feel nothing, and if any, feel proud because you acted on your plan with discipline instead of, oh, disappointment, the trade is break even, or disappointment, the trade is a small profit only, okay? Or disappointment, the trade is only a little bit of a loss. No, be proud, okay? It's positive emotions, not negative emotions, what you need to bring in when a situation like that happens, okay? Again, keeping emotions under control, as we all know, it's certainly critical in the trading game, okay? Cool. So we're gonna remove DAO. Okay, I'm just gonna get rid of DAO, and with all of these comments made, I'm gonna start planning trades. Before I do, I want to give you one more chance to ask any question you may have when it comes to everything I commented so far. You know, the market, the VIX, Facebook, DAO, everything that we covered so far, or yesterday. If you have any question, this would be your time for you to comment. And if I see no comments, then I will go ahead and begin with looking for new trading opportunities. Okay, and you know, again, we're gonna run a process, guys, where, you know, my idea, again, I'm going back to what I said at the beginning of the session, that, you know, we are now running double the amount of sessions per month that we used to do. Again, we are now getting reorganized, if you wish, to take options trading to the next level altogether, right? So now, if you think of options trading, we need to do many things together. I need to share a lot of knowledge. So there will be times where I'm kind of lecturing a little bit. Okay, there will be times where we are doing practical application. So I'll be doing, you know, looking for trades and planning trades. There will be times that we'll have trades and we'll talk about trade management. There will be times, like I did a minute ago, we'll talk about trading emotions and trading psychology. So we'll do a little bit of everything because all is needed. Okay, but there are two key parts for me that are important that you understand I'm thinking about, which is one, the planning of the trades, and the other part is the maintenance, or the trade management, if you wish, the maintenance of the trades or the management of the trades that you have running in your accounts. Those are two different parts. My intention is, when it comes to planning trades, I plan to come up with processes that are going to be even simpler than what I've been running so far. So since the processes are going to be even simpler, we will be able to run more strategies that I never use when we do the sessions, even though I do use them in my own account. Strategies like could be calendars, you know, all sort of option strategies that are powerful and nice when done correctly, of course, like everything. You don't want to fall into a strategy just because, okay? So everything needs to be done the proper way. But my intention is to really simplify the building, the construction of those strategies, so we can be very quick. And for you guys, the part-time traders, that you want to look at the market and very quickly place a trade and run. So hopefully I'll help you with, you know, a bit more simplistic ways on how to look at planning trades and so on. And then on the other hand, when we talk about trade maintenance or trade management, then there I'll open the door to make it not simple but more complex, okay? Because we're gonna have many more options there. Because, you know, again, when you plan a trade, you decide what you want to do and you just plan it and you execute it, and that's it. But then during the life of the trade, that's when many things could happen. Again, when you trade futures or forex or stocks and you either go long or short, only two things may happen, which is it goes your way or it goes against you. But with options, the stock may go your way but volatility against you. The volatility may go your way but the stock against you. Time decay may be hurting you or helping you. Yeah, there are many things that could be happening at the same time, and therefore there are more possibilities of what to do during the life of the trade. So I'll give you two choices. On the planning of the trades, okay, actually for the planning of the trades, I'll give you one choice, which is to keep it simple. But with the maintenance and the trade management, I'll give you two choices, which is a simple approach to manage your options trades, but also a more advanced and more complex. And remember, when I say complex, I mean it in a positive way. I don't say complicated, I say complex. Okay. So we're gonna have the second approach, which is the more complex way on how to do trade management, which of course will have its benefits. Okay. It will also have the downside, which it's actually the fact that it's more complex, and it will imply, looking at more things, testing and double checking certain things, and maybe even discarding it and not approving it, and maybe you cannot do it. Okay, so that will be the downside. It's going to require more of your time. But then the beauty is that it will have a series of benefits. Okay, so we're gonna approach it from these two ways. But certainly on the planning of the trades, I want to keep it as simple as possible because that way it's efficiency for everybody, and also we avoid overthinking. Okay, because overthinking it's directly related to human emotions. Okay, and sometimes you just fall in love with a trade and you get emotionally attached with it because you spend too much time planning it. Okay, so that may sound funny, but believe me, it's like that. So the less time you spend planning a trade, in a perfect world, you would forget. Okay, I always forget my prices. You tell me, the last trade you took, what price did you get filled at? And I kind of made it a routine, to really detach myself from prices where I never remember the last price I got filled unless it's 5 or 10 minutes ago. If it happened a few hours ago, I totally forgot. Okay, so I don't want to be emotionally attached to the trades, and therefore, if the process of planning and execution is very short in time, and for that it has to be very simple, then you don't have that emotional attachment because it took 1 hour for you to plan the trade, and now you just want it to work because it was a 1 hour of your work. Okay. Anyway, hopefully all of this makes sense, guys. So I'm looking at our scanner here, looking at non-directional trades, and please feel free to comment and give me your feedback. Actually, I would really like it. Okay, certainly I make it an option that you guys comment, but I would prefer it not to be an option. I would prefer that we commit to each other to be interactive with each other. And while of course I don't want to force anyone to type anything you don't want to type, I would certainly really appreciate, and it would be so much better that you guys get back to me with your comments as you hear what I just said. Okay, so non-directional trades, we're gonna start here, and notice that the first thing I've done is when I run the scanner earlier before the market open, I ended up with 5 symbols. So what I've done is I sorted them by price. The more expensive above, the cheaper below. And I'm going to start from the top, as I always do, because typically you will get more premium. Typically, not always. Okay. Quick note: if you had done this yesterday, you would have got so many more symbols. Okay. So what happened today? Well, what happened today is that the market moved sharp to the downside, and because the market moved sharp to the downside, lots of the parameters that we have built in on the scanner, okay, which have to do with finding markets which are quiet, okay, trading sideways, etc. So all of those parameters are gone, and therefore the list is now shorter. Okay, why? Because stocks are directly dependent on the broad markets, and if the broad markets push very hard, stocks will follow, right? And a stock that is quiet will not be quiet any longer if the broad market is going crazy. Okay, I'm not saying yesterday and today move was crazy, but certainly it was a little bit of a push, and that made our list to be shorter into today. Okay, so I was going to look into Broadcom, but really we're not going to have to spend too much time here because notice how earnings are actually happening later today at 4 p.m. New York time. Okay, so we are not going to do a non-directional trade on a stock that may jump on earnings, which is the complete opposite of what non-directional would mean. Now, of course, that would be great because 50% probability, that's a great number for a stock. But, again, with earnings, that would be taking uncontrollable risk. And therefore, instead of trading, now you would be gambling. Okay. I mean, there are ways to do earning plays. Okay. But definitely an iron condor is not an ideal way to do an earning play, given the fact that an iron condor is a non-directional trade. Okay, so we will not be inclined to do it this way. Okay, so I'm looking at PDD, and when looking at that company, so the first thing is I'm a bit disappointed by this number, 41.92.99, but for now I'm not fully disappointed because we still have PD pending data. So we need to wait for the data to be fully downloaded, and then we'll be able to assess the probability. If the probability is less than 48, we have to discard the non-directional trade. Okay, it's 45.87. So we have to discard it if it's less than 48. But we'll give it a last chance by looking at pre and post market data and see what we got there. And if we got 48 or more, great. And if we got less than 48, then we'll go to the next symbol. Okay, it's taking a little bit of time to load. I noticed today, actually, when I was loading the scanners, that Not sure what was happening, but it was taking a lot of time to get data out of TradeStation. Actually, I can even show you here when I did my neutral long scans, sorry, neutral short scans. I even ended up with a empty list, which I don't believe is the case. So I kind of identified problems with the loading of the data from TradeStation today. I'm not sure if it's happening on your end if you use TradeStation. So 36.29%, obviously it's even worse. So we're gonna move to Nike and see if Nike will be a candidate for us to approve. So 43%, well, actually we still have pending data, so we're gonna wait. Okay, I'll zoom in. 318, okay, is the earnings for Nike. So when looking at the calendar, so the next expiration date is gonna be the 12th of March, the next is the 19th. Earnings are on the 18th, so we cannot use 19, but we could certainly use 12. Okay, so let's see if we could have a trade, a valid one, with Nike using March 12. So again, waiting for the pending data so we could look at the updated value, so we get to understand the real institutional interest. Okay, so using pre and post market data, you can see that is not too exciting. Using regular session, we get the 48% that we need. Okay, so that's good. Okay, that's good. And we do have multiple UFOs above, and we do have multiple UFOs below. So this qualifies as a valid environment for us to begin the planning. It doesn't mean that we have an approved trade yet, but we could begin the plan since all the other parameters are valid. You show 58, Christian. Okay, that may mean that you are using either a different quantity of data loaded on the chart, or you are using a different calibration setting for your AutoUFOs. Okay, my calibration settings is the golden ratio. I use 0.618. Okay, that's what I use. So if you have a different value, it's because you are using a different calibration setting or a different amount of data loaded on your chart. I am loading about 1,500 candles on my charts. And again, my calibration setting is 0.618. Okay, so if you do that, you may get the same as me. You should, actually, because unless I got or you have corrupted data on your cache folder, unless we have that problem, any of us, we need to have the same data, because the beauty of computers is that they process data better than humans. They make no mistake. Okay, so it's going to be the same. So what do we have with Nike? So I'm going to be looking at March 12th. Okay, and when looking at March 12th, I'm just going to right click anywhere and analyze and sell an iron condor. And here's the iron condor. And with March 12th date plugged in and putting on the side, I haven't adjusted strikes or anything yet, which I will, but not yet. So the only thing I'm interested in is in finding out more about these two values. Okay, the one standard deviation above and below, which is 140 and 127. Okay, so let's go back to the chart with 140 and 127 in mind, and let's go ahead and draw a line at 127, which is more or less here. Okay, and I'll do a parallel, and was it? I just forget the value. I told you I forget the values all the time. 140 something. So 140 something would be somewhere there. Okay, good enough. So Nike is here in the middle. From now until March 12th, what statistics suggest is that the stock will do whatever it does, but it would tend to remain between the two dotted lines. So that's very good to know, because this immediately allows us to look at the UFOs, and I'm going to start with the bottom part. The rule is we need at least two, with the last UFO being beyond the dotted line. So here we got one. Here's the second one, and the second one is beyond the dotted line. So in other words, 122 is the strike that we will want to use. And if I was to do the same with the upper part, one smart way to do it, okay, and unfortunately, I believe this trade will not work, guys, but let me go ahead and do this. One smart way to do it would be to calculate the vertical distance from the current price to the bottom. side of the range, project that above, and now just use the UFO, which makes the current price to be as close as possible to the midpoint of the range, and that would be done this way. Okay, so basically we have above, we have 1, 2, 3, 4 UFOs. The rule is minimum 2. We got 4. Okay, below we got 2. Okay, what's important is that the extreme UFOs are beyond the dotted lines, and they are more or less equal distance, making the price, the current price of that stock, to be quite close to the midpoint of the range. So that would be a fantastic range for an iron condor, but I am very concerned. This range, it's very, very wide. And with only 1 week to expiration, I am very concerned that the 145 is not going to pay enough. So instead of getting into any additional analytics, let me double check that. And unfortunately, I am right, and therefore the trade will be discarded. So what is our minimum requirement? Our minimum requirement is to get paid 35 cents for the strikes that we sell. And in this case, you can see we would only get 18. So should I keep going with this trade? No. It's a shame, but it doesn't work. And really, the reason, just for you to know, when you plan trades by yourself, just for you to know what to do or why this happened, well, the reason is because the distance between that UFO and that UFO is very far away, right? If instead, we had a situation like that where the UFO above the dotted line was, much closer, right? And you were to do the same thing I did, but I'm doing it backwards now, starting from the top. So you had that distance above projected below, okay? And therefore, that was going to be your range, because let's pretend that there was a green UFO located here. Okay, let's pretend we have one. Okay, well, now you will be dealing with an iron condor going from 124 to 143, right? And if I was to look at the 143, 142, 143 doesn't pay enough, but the 142 would pay you 38, which is 35 or more. So maybe we could run a trade here. But in this case, because the below UFO is far away and we cannot change that, and we don't want to make it up, okay? We need to respect market data. So we cannot approve this trade because it doesn't pay enough for the strikes that we sell, okay? So I'm going to move to the next one. And again, the life of a trader, really, it's to discard more trades than the trades you accept, okay? So that is something that needs to be clear in your mind. Again, not to build frustration into your trading activity. Okay, you should be ready that every time you load something on the chart, probably you're going to say no to it. And maybe you'll say yes. And that's how you add probabilities on your end. If you were to say yes to everything, that means you trade low quality, right? If you trade high quality, then it's going to be less quantity. Okay, so let's trade well. Let's do this the right way, guys. Okay, I'll take a sip of water while we are waiting for this to load. Thank you for that. So still waiting for this to load. You know what? To speed up the process, I'm going to click on Oracle as well, so it starts loading in the background. So then we don't have the problem when I do Oracle. So back to JD. So let's see if JD is going to give us an opportunity. So hopefully between JD and Oracle we'll find one, and we'll plan for it. And I'm sorry about the slow speed of loading today with TradeStation. I'm not sure why. I did check my connection and it's absolutely fine. I did reboot my computer just in case it was fine. So I guess that there is some sort of, maybe some maintenance or something on downloads with TradeStation. I will guess. Okay, here we go. We have it. So 45% with JD. If we were to look at regular session, of course, that's not acceptable. If we look at pre and post market, it's 42. So we are not going to accept JD. And if we look at Oracle, we got 50% when looking at pre and post market. So that's good. And if we look at regular session, we have 55%, which is really, really good. Okay. Now, I am under the impression, if I look at the monthly time frame, that Oracle, it's making all-time high. And what's the issue with that? Well, the issue with that, if I go back to the 55-minute time frame, is that we have on-field orders to buy below. We have green UFOs, okay, but we don't have anything above because there has never been price data above, so the app cannot evaluate any market data at all. Okay. So we cannot plan an non-directional trade with Oracle. If Oracle was in the neutral list, Oracle is not there. And notice how my list got at B with a B. That's very weird. As I said before, I got problems with loading data with TradesTation today, when I was doing my scans. So yeah, so if Oracle was in the neutral list, so I could do a credit spread. But still, also something to keep in mind is that earnings are on the 10. So the only way to do this trade would be, to use a very short expiration date, which is basically tomorrow, because the next one would be March 12th. We cannot do that. So we will need to be using tomorrow expiration date. And again, this is a $60 plus stock. It would be quite difficult to find premium enough, those 35 cents that we need. It would be quite difficult to find, given the fact that the stock is $66 per share instead of Broadcom, for example, on the top of the list, which is 400 over. Okay. So where did we end up? Where we ended up saying no non-directional trade today. Okay, no non-directional trade today, and therefore I'm going to move into looking at what we have when it comes to possible shorting opportunities and possible opportunities to go long. Again, I'm not too confident of the returns I got from my scan today. Okay, it's very short list. I'm okay with a list to the upside to be short because the market has been pushing down, but I'm a bit surprised that we only have one result to short with Best Buy. In any case, let's go ahead and take a look. So I'm just gonna load Best Buy. We got 46%. That's not acceptable. Actually, for directional opportunities, we need at least 50. Okay, so we're not gonna have it. Pre and post market provides 42, which is even worse. So then we are not gonna do it. And again, I'm gonna rerun the scan in the background because in my mind we should have more symbols. Okay. Okay, now it seems to be loading normally now, at least, so that's a good thing. Okay, so let's start looking at the opportunities to go long. Okay, so we'll look at HLT first. Okay, so looking at HLT, 44% with pre and post market data. That's not acceptable. Regular session is 41, is not acceptable. And also the climate is not acceptable. We've been in an up climate for that stock for 21 candles, where statistics suggest 6. So this is one of those amazing anomalies, right? It's one stock just keeps going, okay? Which this happens, okay? This happens. But of course, entering now, it's probably way too late to the party, isn't it? So we look at Medtronics. So waiting for symbol attributes. I'm going to check on the scanner. Oh, it's calculating normally. Okay, so that looks a bit better. Okay, still pending data, so we cannot evaluate this yet. From a climate point of view, we do have a go. Go ahead. 3 out of 6. Okay, so 3 out of 6. It's valid. We are not late to the party. So reference point for a trade would be 117, which is the current price. Okay, so the current price of the stock would be a good entry price if we were to find a UFO. We got 49.59% with regular session data, which is less than 50. So I'm not going to bend the rules. It's not good. But what if I do pre and post market? We got 38, so it's not good. I thought maybe we had a trade, but we don't. So let's check CZR and see what's going to happen. Okay, So, well, we're gonna pass, okay? Putting on the side probabilities, 10 out of 9, okay? That market has been running in that direction for a bit too long. So we're gonna move to RTX. Okay, waiting for this to load. So what's happening with my down scanner? Processing, okay. So, okay, from a climate point of view, we are fine. Okay, we are candle number 3 out of 7, so we are fine. Reference value for a trade would be 74 something, so we are looking for UFOs around this area. We don't have them on the pre and post market session, and on top of that, probability is not good. Okay, but what if we move to regular session? Probability is 47. Okay, it's a shame because we do have a UFO around that price level, so that would qualify as an entry. Problem is that for that stock in recent times, institutional interest has not been enough, and that has been hurting this probability metric. So we don't want to do that because you don't want to be the only one buying a stock, isn't it? We need the large institutional players to enter the market with us or after us to help the price of that stock to move in the direction we want it to be. So we are just not going to bend the rules or force a trade. So what do we have with US Bank Corporation? So we have 3 out of 6. So the climate is confirmed, and it's from a sustainability point of view, it's fine. Probabilities, let's wait and see. Reference point for a trade would be 50.75. So it's more or less here. Okay, it's just a bit below the current price. So if we were to find UFOs at this price level, we need to wait for the chart to fully load, and we're going to explore as well the pre and the post market session. So if we were to find UFOs around 50.75, then we would have a valid setup to be accepted and a trade to be taken. Okay. So 51.64, this is delicious. Okay, we don't see that often with stocks. We are happy enough when we see the 50%, isn't it? 51 for stocks, it's nice. What about pre and post market? We got 39, so that's not good. And while probability is good, here we don't have the UFO. Okay, so here probably, I mean, this is for you to review tomorrow. Again, probably you'll be running the scan and do this no matter what. How are you, Joanne? It's a pleasure to see you. So this is for you guys to review tomorrow. You will probably run the scan, and the scan will cheat you this potential trade anyway. But just keep it in mind because, again, as I said, we don't see these type of probabilities often with stocks. So what may happen here is that the stock may drop a little bit today, blah, 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 and then maybe slows down at the end of the day, and then maybe tomorrow is an up day. Market has been falling the whole week, so Friday may be a profit-taking day, and the market gaps up. And if something like that happens, we may end up displaying, some sort of a UFO, at this price level. Okay. Sorry for that. I didn't mean to do it like that. Like this. Okay. So we may end up having a UFO at this price level, which would coincide with our reference value for the trade into tomorrow. Okay, so again, a bit of patience is needed here. You will need to review this trade yourself tomorrow. Keep it in mind, keep it in your radar. A UFO may be available tomorrow for that stock, and if that's the case, then a trade is valid because the climate would allow you to still take the trade. HBI. So let's move into HBI. So first, from a climate point of view, okay, good. So thick and blue, that means the climate is confirmed. We have permission to be a buyer. From a sustainability point of view, candle number 3, statistics suggest that this up climate is likely going to last by 6 candles. So certainly we are in a good time for us to take this trade, assuming all the other rules are met. So the other rules will have to do with the UFOs and the probability. So we're going to have to wait. Our reference value for the trade would be 18.26, okay, which is somewhere around here. Okay, and so far we don't have a UFO there. The UFOs are found at different price levels, but not there. So the technology don't approve that location as a valid area where on-field orders are available, and therefore we are not going to make it up. Okay, 49% is not enough. Pre and post market is giving us 38, which is even less, so we're going to pass. And I'm going to check the last one, which, to be honest, I'm not too happy to be looking at a $15 stock, okay? Because again, the cheaper the stock, the less it makes sense to use options, okay? And this is very, very the bottom limit. But given the fact that today I got problems with the market data and my list is short, I'll take a look, at least from an educational point of view, if you wish, from a process point of view. It helps you understand. So 4 out of 7, that's good. Thick and blue, we have permission to be a buyer. Okay, sustainability is giving us permission. So waiting for the market to load. Interesting that I still got one result only for the short scan. So something must be going on. Anyway, with the data feed. In any case, so 41.32%, that is not acceptable with pre and post market data. What about regular session data? We are dealing with 49.85, almost 50%, but it's not. And again, we are not going to make it up. We are disciplined traders, guys. We don't break the rules. We don't even bend them, okay? Because bending the rules is a way to convince yourself that you didn't do anything wrong when you broke the rule. Bending the rule is breaking the rule, okay? So we don't do that. We are disciplined traders and we follow processes, okay? Good. So my friends, I'm out of trades from my list, okay? I do have a collection of trades here, but I don't trust the result, because if you notice, as I showed you before, it goes from A to B and then it stops, which makes no sense. So I got a problem with market data, and therefore we are just gonna turn around and do something a bit different that I would not normally do in the session, which is, instead of I provide the symbols to you, instead, you guys, what about you guys tell me which stock you would like me to analyze, and I'm just gonna run the whole process to see if we have an opportunity to make money on the way up, an opportunity to make money as the market falls, an opportunity to capitalize on a sideways market or some sort of a range trade, or maybe even I even see another type of options play that we could put in place. So this is your turn, my friends. Christian, I don't follow you with your question. I own F calls. I'm sorry, I don't follow you. I'm just reading you now, and maybe if I had been a bit quicker to catch your question within whatever I was saying at the time, I would understand better. G, thank you very much, Joe. Let's go for it. Oh, okay. That was so silly, isn't it, Christian? So silly of me. Of course, you meant Ford. Understood. So, well, interestingly enough, both Joe and you, Christian, you're looking at motor companies with, well, actually, I didn't say that. General Electric is not General Motors. For a minute, I was thinking General Motors. So anyway, so let's look at GE first, and then, Christian, I'll be looking at your Ford trade, okay? So let's go for it. So GE is loading. I'm just going to type F for Ford as well, so it loads, because obviously today, with the little problem I got with the loading of the market data, I would like to minimize that. Here we go. So we're going to start looking at GE from a climate point of view. And again, if we look at GE from a climate point of view, we are in a defined climate to the upside. We've been 21 candles in a climate where statistics would have suggested that 7 candles, it's reasonable. Beyond 7 is not reasonable in the longer, okay? Or it's, it's not sensible, okay? It's hopeful. You would expect in the market to go beyond 7 candles in the way up for that stock. It's not a reasonable thinking. And while that's the case, statistically speaking, it's been moving for 21 candles, okay? So again, this is when the statistics are broken, and that's when we see those amazing moves on some stocks from time to time, okay? So that's what's happening with that stock. So, of course, when a stock is behaving this way, obviously the last thing you want to do, while it's certainly powerful and it's impressive to observe, but the last thing that you want to do is to go ahead and be like, okay, so I'm going to buy now. Because could it go for another 21 candles? Of course it could. Anything could happen, right? But already we are in a non-likely territory, above 5 candles, which is 21. We are already in that unlikely territory. So keep betting on the market moving higher. In that particular case, it's just fighting the probabilities, okay? Which, again, could happen, but we're not going to act based on a gut feel. We want to act based on evidence and measurable parameters. So what would be my thinking when I see a stock like that? So first of all, it would be to either plan on shorting it, okay? But unfortunately, even without looking at other time frames or other UFOs or anything, my problem here is that when I look at the chart, I see 48, 98%. And what does that mean? Well, it's below 50%. And if it's below 50%, immediately I know I cannot be directional, because those unfilled orders tend to be canceled more than remain in the market to be filled in the future. Okay, so that is not providing us with odds. If we look at pre and post market, now we are talking. Notice that institutional interest for that particular stock is happening with more intensity during pre and post market compared to regular session hours or regular trading times, or regular trading hours, I should say. That's the technical term. Okay, so now we are talking. So now I feel confident to think about maybe shorting that stock. Okay, now I do need a specific criteria, and I need to analyze more data to be daring enough, okay, to go ahead and go against the climate, because the climate is defined and confirmed. Okay, it's not like I got a thin dot. Okay, so here, for example, you can see, okay, that we got a thin dot, and then it changed from red to blue. Okay, but here we don't have a thin dot, so expecting it that the market's going to change immediately to be red, it's a bit daring. Okay, that's what I meant. Okay, could it happen? Of course it could happen, but again, it's a bit cheeky, right? So in any case, let me do the analysis. Okay, and I'm going to start all the way from the monthly time frame. Okay, so I'm looking at the monthly time frame of G to see where we're at. Okay, and in the monthly time frame, we are not at any UFO level. Okay, so that is not encouraging me to short yet. There is nothing to turn the price around so far. What if I look at the weekly time frame? Well, that's a different story. Now, in the weekly time frame, we can see how we are hitting a UFO, which is also providing more than 50% probabilities. So now we are talking about something that is potentially valid for me to go ahead and plan on a shorting opportunity. Okay. Now let's go to the daily time frame and see what we got there. And I'm gonna have to load more data. So back to the weekly. So that UFO area was created on May 18. Okay, so if I go back to the daily time frame and I load data from May 18, guys, this is incredible. I use TradeStation every day and I just type this information in the wrong place. I'm like, that's just not possible. Sorry for that. Now, okay, so May 18, okay, so when we look at May 18, you can see that we don't have a price entering the red UFO yet. And even if it did, that UFO, those UFOs in the daily time frame, don't work as well as the one from the weekly or the 55-minute time frame. Okay, so from that point of view, I am a bit stuck. Okay, I am a bit stuck in the sense that I am not finding what I need to do a shorting, to do a trade to short that stock. Okay, now does it mean that I got nothing to trade here? No, maybe not. It depends. So what am I going to do? I'm going to give you a few alternatives. First, I'm going to look at the implied volatility to find out what is the price of those options. Okay, and as you can see, the price of those options is very, very cheap. So then basically, I'm just going to give you one alternative. That's the only one I'm going to give you, because with the options being so cheap, basically the only thing you are left to do, you could do things such as calendars, double diagonals. We haven't discussed that, so I will not mention it yet. basically what we know is that when premiums are low, you want to buy options. So, we said, let's try to short the stock, and options are very cheap. So you will want to buy a put. Okay, that's basically the only thing you could do. That's the only alternative I could discuss with you, right? But what's the issue? Well, the issue is the timing. While buying a put on that stock could make sense, betting on a change of climate and riding the climate in the opposite direction, um, doing it now, it's basically doing it in the middle of nowhere. So if you buy a put now and General Electric falls, you just got lucky, because there is nothing here that shows you that it's going to fall. Okay, so what would I do? Okay, well, first I will want to load data all the way to this date. Okay, so May 1st, 18, on the 55-minute time frame. Okay, and that, by the way, is gonna stress TradeStation big time. So as you saw, what I've done is I turned off AutoUFOs. Okay, so I turned off AutoUFOs for the whole download to take place. And once the download takes place, what I will do is I will disconnect TradeStation from the network to be able to then run AutoUFOs and be able to assess the above market data, if that market data is giving us any clue of unfilled orders waiting to get filled above price. And if that was to be the case, then I will go ahead and have a price point for me to utilize as a timing on when to buy the put and ride a move in the opposite direction on General Electric. Okay, is that making sense to everybody? Yeah, John, I'll be looking at Home Depot as well. Costco. Okay, got it. Costco, not Home Depot. Very good. I'll do that. Okay, so it's taking a little bit of time here. Okay, so what type of play you are planning to do on Costco? Would you mind to elaborate a bit on that? Are you planning to play the earnings themselves? Are you planning to find a good entry point for after earnings in case the price gaps to your entry point? What are you planning to do? So I fully understand what you're trying to do. So when I look at the charts, I can assess it more precisely. So very good. So everything has been downloaded. So I'm gonna disconnect TradeStation, and now I'm gonna enable AutoUFOs, which will reveal where the UFOs are. Okay. And by the way, when I load so much data, notice how those 55-minute UFOs are working very well. 62%. That's luxury for a stock. But notice that we don't have any UFO until we reach this price point, which is 14.27. So in other words, I insist shorting or buying a put on G now is basically doing it in the middle of nowhere. You don't have the odds in your favor. So two choices: wait until it gets to that price point, then you buy the put and you expect it to fall, and probably a change of climate, which would imply a very severe drop for, let's call it 6 days based on probabilities. Okay, or wait, and what may happen is that some new UFO may form, be tomorrow, okay, at some lower price point, and that, if it's tomorrow, that may coincide with a different type of dot, maybe a thin dot. That would be even better. Okay, and now you are basically entering a new development, in a market, but you got a bit more evidence instead of just betting on it aggressively, which is why I was using the term daring earlier. Okay. Anyway, hopefully all of this makes sense. Let me go back to all of this. I need to look at Ford and Costco, and then we will call it the day. So let me reconnect. Here we go. Just reconnecting TradeStation. That's it. We're good. So now I'm going to move to Ford. So you own calls on Ford, meaning that you have a bullish bias. That's good. Okay. From a climate point of view, 3 out of 6. It means that you're in an up climate. The up climate is likely going to last for another 3 more candles based on stats. And therefore, this uptrending condition that you have right here, it's likely going to remain. UFOs on the pre-market, using pre-market data, are providing us with 59% probability, which is very nice for a stock. during the regular session, 61, even better. Okay, even better. And then you have also UFOs here to protect yourself. So I'm not sure, Christian, when did you buy the calls? But certainly, I would say that, given the data that we have in front of us, I would say that even if 4 was to fall, given the up climate, when it hits that UFO, it's likely going to resume and continue. And because it's an up climate, probably that UFO is not going to be that big of an issue, okay, when price gets there, because sell on-field orders tend to be canceled when you are in an up market. So that red UFO should not be that big of a trouble. So you are in a good position. So if you enter that stock much lower, something that you could consider doing maybe is to use some of those UFOs as an alerting type of mechanism, like what we did with the Dow trade, where that price point basically would trigger an alert for you, so you can just go ahead now and close the trade manually, and just exit the trade for whatever profits you collected, assuming that you entered below that price point, below 1170. Okay, you entered on March 1st, so March 1st was more or less here. Okay, so well, March 1st, it's actually above that, so then you cannot use that UFO, because basically that UFO is probably below your entry point. Okay, so then that would lock in a loss. And if you own calls, not sure how did you plan the trade, but I would assume that you are probably using the premium paid for the call as your stop loss. So if you bought a call and it cost you $2, I mean, it's going to be less with Ford, I guess, given it's a $12 stock. But let's say the call cost you $2. So what is the most you can lose? $2, right? No matter how deep it goes. So if you are using that philosophy, then just wait. And what may happen is that other UFOs form as the stock goes up, other UFOs form as the stock goes up. And then these new UFOs that form will be the location where you set alerts, where if the market was to hit those alerts, instead of continue the way you wanted, it was to hit those undesirable price points, but it happens, so then you will want to close the trade manually for a profit. So far, looking good, Christian, based on what I see, and congratulations on the trade. And I want to move now to Costco, and we look at, Joan added a bit more information here. So it is after the close, looking to have it go to my zone, then set it up. Way to go, Joan. 340 to 346 short, long 315, 309. 284, 267 daily. So we'll see if it moves. Wanted to see if the zones, yeah. Which time frame are you using, by the way? Which time frame are you using? I'll start with the daily. Okay, and if we look at the dailies, so you can see you mentioned 340, so there is one here. Okay, 340. So this is one, and we have a UFO there. The other one is 343. So 343 actually is also within that UFO. Okay, that UFO ends actually at 343, as you can see. So yeah, so those two price points that you just commented are located within a UFO, and the other ones you commented 315 and 309. So 309 is somewhere here. That one is not lining up with a UFO in the daily time frame. Okay, and the other one you said 315. So 315 more or less here. Okay, is not lining up with a UFO either on this time frame. Okay. You're looking at the daily and the weekly and the monthly. Okay, got it. So if I look at the weekly, okay, now yes, you do have a UFO there on the weekly, okay, that is lining up with you. And if we look at the monthly, it's the beginning of that very, very, bulgy UFO below, and so on. Now, on the monthly, probabilities are 47. On the weekly, probabilities are 53. On the daily, probabilities are 56. Okay, so it's looking pretty good, because the red UFO that is coinciding with your price points, Joan, has a nice probability from the daily time frame. The green UFO that is coinciding with your entry zones as well It's also coinciding with a UFO on the weekly, which also has a good probability. Again, 53% probability on a stock. It's very, very decent. Okay, most stocks have 40 plus, things like that, because orders get canceled all the time. Futures, forex have much higher probability because there are 24-hour markets and orders don't normally get canceled so easily. Okay, but in any case, I would also like to check what we have on a lower time frame, because here on the 55-minute time frame, you can also see a very, very nice probability, and also coinciding with your trading prices. Okay, so I would just comment that if you plan your zone to be up to 343, okay, I mean, let's do this right. So 343 to 340, that was your exact prices that you shared. So if you were to set a stop right above this, I would say careful. It would be better to have the stop above this guy, which is 345.67. Okay, why? Because the market make up on earnings, come to your zone, teases you, and then goes all the way. And then if your stop was too tight there, you get stopped out, and the reason is that guy was there. So just be aware that there is a little bit of an overlapping here with more UFOs. And on the bottom part, you said 315, 309. So yeah, so the 309, I mean, again, my number is not exact, but it's good enough. This is in the middle of nowhere. Okay, it was well located on the weekly, but on the 55 is in the middle of nowhere. So I would say that 309, below 309 is a very good location for a stop. And definitely your entry at 315 is within UFOs in the weekly and the 55. So looking like it's powerful. So if Costco was to gap aggressively on earnings and gets to any of those zones, either above or below, you may get to see a very sharp turn in price. And what tends to happen with earnings, I'll do one last comment and we'll be done for the day, my friends. What tends to happen with earnings is that if we look at the implied volatility of the options, what tends to happen, so this was the last time we got earnings. Okay, this was the last time we got earnings. This was the last time, or the time before we got earnings. So what do you notice? Right before earnings, premiums are very, hefty, very expensive options. But right after earnings, options become way cheaper. Before, more expensive, after cheaper. Before, more expensive, after cheaper. So again, if price comes to any of those zones, just doing a basic debit spread or even a long call or a long put could be a very nice way to capitalize on a pretty fast reactive move out of those trading zones, moving in the opposite direction. Okay, so nice, like it, and that's the way to go. And of course, Joanne, you're the master. I know that. But it's all about pre-planning and being ready. So when the trade takes place, there is no rushing, there is no improvising, there is no human emotions. And what a great example of looking at this earnings play, not to play the earnings, but to be ready for after earnings when price gets into key tradable areas to take a trade, betting on a move in the opposite direction. Very good, everybody. My friends, it's been my pleasure. It's been my pleasure. It's been lots of fun as always. I hope you guys enjoyed the session. I'm looking at all the chat boxes. We are all good. Today, just like yesterday, guys, I did not disconnect the public streams. So we've been streaming everywhere nonstop. Again, we're getting organized little by little, and the plan as we structure the way on how we deliver the sessions. And also the market data, the problem with the market data I had today. So the idea will be that the moment we get to trade number one, we analyze it, we plan it, we execute it, then we will disconnect from the public channels and we will remain in our private room. And that way we make everybody happy, the two groups, the part-time traders, okay, and the super traders of the world, as I define at the beginning part of the session with, this sense of humor, which may be a good one or not so good. I'm not sure about that. Yes, Maka, we'll be introducing new strategies. We will be introducing new strategies. I'm going to be doing things little by little all together because, of course, we are a mix of traders in the community. But the idea is yes. And I'm going to start very soon because remember what I said earlier in the session, that for the planning, I plan to simplify a lot of how we plan and execute options trades. So I'm going to do that at the same time as I explain other strategies that we never discussed in the room. For example, calendar spreads, just to pick one strategy that we never traded together here in the room. Okay, so we will be doing that, and that will link it to the planning of the trades, the new way, the new simplified way on how we're gonna do it in the following sessions. Okay, so yes, the answer is yes, Maka. Very good, everybody. You guys take care. Be safe in the markets and stay safe out there with COVID-19. Take care of yourselves, everybody, and see you soon. Bye-bye, everybody.